So now we're going to get into a little bit of a trader education piece that I want to share with you. I'm always talking about riding the impulses. That means it's about the importance of being on the right side of the big moves in the market for your best overall profitability. That goes for traders or for investors. You really need to get a good ratio of catching the bigger trades versus the size of your losing trades. We all have winners and losers, and it's important to have more winners than losers. But it might be equally or greater importance that your winners are much bigger than your losing trades or investments. So we're always looking for ways to show that to you. And I'm going to show you another way right now. Last month, I brought to you the momentum breakout bands and showed you the importance of using them. And many of you wrote to me and said that, wow, you liked it. And many of you wrote to me and said, wow, those are not on my system. So I'm not able to put up these momentum breakout bands. I'm going to show you this other way because I want to kind of get you the opportunities to improve that win-loss relationship, and that's by looking at Japanese candlesticks in a little different version. This version I'm going to show you is called Heiken Ashi candles. Heiken Ashi in Japanese means average bar. Essentially what they do is they take a candlestick and they add in a 2-day moving average. So it smooths it out a ton and essentially is a reflection of trend. Now, you lose a little bit doing that. If you're an avid candlestick user like I am, you might want to use them side by side. But I really want to show you how this helps you with trend and how important that is when we look at this. What you lose is your candlestick patterns, and you also lose gaps. So those are important information. So again, you might want to use the both variations of candlesticks. I'm going to move in a chart right now for you to see, and that is a kind of a double version of candlesticks charts. You can see on the left and the right, those charts look pretty much the same. However, the one on the left is a regular candlestick chart. The one on the right is an Heiken Ashi chart. I'm going to zoom in right over here, and I'm going to look at this period right over here where the stock market had that big decline in March as it rallied up into that March period and then turned down. And now you could see the side-by-side candles in here. So there's some things in here that you'll see that don't show up, but other things do. You can see in here that it kind of looks like a pretty choppy action on the way down. And each of these candles, you don't really have a sense of trend in there. I mean, you know it's going down. There's no other indicators, but you don't really know when it's going to stop going down. Here you had a little island formation right over there. And if you look over here, that island did not form because the Heiken Ashi does not allow gaps to be seen in there. So what's valuable in here is that you see that this doesn't really reflect the trend right over there. However, this clearly reflects the trend right in here, and it's a much better observational way to get a real sense for trend in the market and for not entering on your longs too early or staying in your shorts in this case and being able to catch the big wave down. There was a minor uptick in here of a few days. You can see that right here. But then the downtrend reestablished, and it was visible. You could see that as it showed you that on these Heiken Ashi candles. You didn't really have a sense of that right over here, so that really gives you the sense of the value of using the Heiken Ashi candles, or both as a side-by-side, as I have right here, so you can get a good sense about candlestick signals and momentum signals all at the same time. I'm going to move this over and just show you the market we're in right now as the NASDAQ has been surging on the upside. And you can see in here this upside, you could see it moving up. It was pretty clear. But this shows you in here these trends that continue on the upside. The correction that you can see right in here, and then the resumption. And here's a little, I put that arrow in there where it resumed again after giving you that those little flags. Now, the flags and things like that still work. I can put the flag right in here, as you can see, and I can put a flag right in here, and it shows up on both. You can see that, where you have those flags and your breakouts, and all that still works. But over here, you're not really that sure. Here you see trend resumptions that are really clear. So you could see as we looked at the NASDAQ, just great information using that that different type of candlestick. Really, really valuable. Let's just take a look. We'll look at a commodity, we'll look at a couple stocks, we'll look at an ETF, and you'll get a sense for it just to look at this really quickly and see the value in here. Here's your light crude market. So if you look at this decline in here while the market was collapsing back in March, you can see the clear trends that it's showing you. I mean, I don't know, I love the momentum breakout bands. I love the slim ribbon. All of those things are great momentum indicators. This is a really simple one. If you don't have those and don't want to put those up and clutter your charts, it really gives you a very, very good sense for trend. Here you could see the uptrend that established right over there as the market started to go up. And instead of getting all those messy gaps going up and not understanding the market, the Heiken Ashi gives you a very, very clear look right there. And again, you could see these little flags as they show up, and those are often little corrective areas. And then when the uptrend resumes, well, then you could see the quality of that right there. So just great, great information when you look at that in light crude. Let's look at a couple stocks, and you'll see, let's just pick Microsoft right here, and you'll see these clear uptrends. Just look at this uptrend right here, and these little consistent waves of upward movement here that they probably lasted about 10 days, 9 to 11 days on each one of those impulses on the upside. Very clear when you look at that. Boeing, which has been a horrible stock and now is in a rebound period. I mean, let's just look right over here at this period there where it had the big break. You can see the clarity there in that downward trend. Does it get any clearer? I don't know. I mean, really valuable when you look at that. And now we're in this uptrend that we had that uptrend, as you can see, that stalled. And the Heiken Ashi candle is really giving you strong information. One more that we'll look at right here. This is interesting because I mentioned earlier in the show that China has done so well. And what this is really good for is that in stocks that gap a lot, or symbols that are like ETFs or ADRs or things that move around a lot in gaps, this smooths it out. It gives you much better information. So if you look at this rally period, well, let's just look first at the sell-off period right here, and you could see you don't have those gaps. It smooths it out. It gives you great information. And if you look at this rally period we're in right here, you had those big upside gaps. You can see that, but trend is much, much clearer when you look at it with the Heiken Ashi candles. It gives you a much better pieces of information because we're always looking for a sense of understanding the market, and this does a much better job of that for you. So didn't want to go there yet. We'll come back to the light crude in a second. So that's a look at these this great educational piece. Heiken Ashi Candlesticks, ways to ride the upward impulse or downward impulse, whatever it is, and give you a much clearer look at the market. I hope you liked that. You can always send me your comments on that and just let me know if you found it valuable. Always want to hear that. So that is a look at our trader education piece for the week.